let's get straight to it. We're not talking about just another stock today. Nope. We're diving deep into a company that's being set up right now to be at the absolute core of America's industrial future and its national security. This is a story about way more than just stock prices. We're talking critical minerals, we're talking geopolitical chess, with billions with a B on the line. Welcome to Iron Financial. This is where we help you forge a stronger portfolio by stress testing the market's weakest links. The company is USA Rare Earth, ticker USAR. And the question, well, it's a big one. Are we looking at the solid steel foundation of a new American champion? Or is this whole thing just a house of cards built on sand about to come crashing down? Let's get into it.
So here's how we're going to break this down. First, we're going to build the bull case. We're calling it the promise. Then we'll bring in our skeptic to really tear apart the blueprint of this huge government deal. After that, we'll stress test the foundation, pitting the numbers, the hard facts against the story everyone's telling. Then we'll search for the cracks. And trust me, there's a political firestorm brewing that could shake this whole thing to its core. And finally, we'll give you the verdict. Is this a solid iron investment, or is it just worthless, unrefined ore?
Okay, let's start by forging that bull case. To really get why there's so much hype around USA Rare Earth, you first have to understand the massive strategic problem it claims it's going to solve. See, these high-performance magnets, they're kind of the invisible engine of our entire modern world. I mean, they're in absolutely everything. F-35 fighter jets, missile guidance systems, the drive units in every single EV on the road, the generators in every offshore wind turbine, and for decades, the entire global supply chain for the rare earth elements you need to make these magnets, it's been dominated almost completely by one country. Now, this isn't just an economic headache. It's a huge national security vulnerability. I mean, the Pentagon itself considers it a critical threat. And the bull case for USAR starts right there. It's positioning itself as the one all-American solution to this problem.
And this is really where the investment thesis just ignites. The U.S. government is actively, desperately trying to break that foreign dependency. They are literally shopping for a national champion, a single company that can build out a secure, domestic, end-to-end supply chain. And that's the story. That's the narrative that USA Rare Earth is built on. See, they're not pitching themselves as just another mining company. Oh no, they're positioning themselves as a strategic national asset. They are the answer to a problem that keeps generals at the Pentagon awake at night. And when the government needs a problem of this size solved, it doesn't just offer a little support, it usually brings out the checkbook to build a fortress.
And here it is. This is the number that dropped like an absolute bombshell and put USAR on every single trader's radar. $1.6 billion. Let's really break that down for a second. We're talking about $277 million in direct, non-dilutive funding from the CHIPS Act. That's huge. But it's backed by a staggering $1.3 billion in cheap, long-term government debt. For a company that isn't even making any revenue yet, this is, well, it's everything. This isn't just some vote of confidence. This is basically the government handing USAR the financial keys to build an industrial empire. It sends a signal to the entire market that this company might just be too important to fail. And this right here, this is the blueprint for that empire. That money isn't just for digging dirt out of the ground. No, USAR's plan is all about total vertical integration. It's this mine-to-magnet vision that frankly no other American company has been able to pull off. It all starts at the Round Top deposit in Texas, which is believed to be the single richest deposit of heavy rare earth elements. We're talking the most critical and valuable ones like terbium and dysprosium in all of North America. From there, the material gets processed and shipped to their brand new magnet manufacturing facility in Stillwater, Oklahoma. And they're already making progress. They just hit a major milestone, announcing back in March of 2026 that they've commissioned Phase 1A of magnet production. So the structure is actually being built. The vision is slowly becoming reality. The key takeaway for the bulls is this. USAR is creating a closed-loop, completely secure supply chain all on U.S. soil. That kind of achievement makes it a prime candidate for a fire hose of government support and eventually long-term defense contracts. The steel frame of this bull case looks solid. Whoa, hold on a second. A strong frame is totally useless if the blueprint it's based on is full of holes. Big numbers and grand visions, that's what gets you headlines. But here at Iron Financial, we always read the fine print. So let's pull out that blueprint for this so-called $1.6 billion deal and see if it's drawn on solid bedrock or if it's just sketched on sand. Because I think you're going to find there are a few very important details the bulls seem to conveniently leave out.
Yeah, let's start with the two most important words in this entire story, shall we? Non-binding.
That $1.6 billion, it's not a check that's been cut, it's not cash in the bank, it's what's called a letter of intent. You know what that is? It's basically an engagement, not a marriage. It means the government has outlined a potential path to funding, but there's absolutely zero guarantee they'll ever walk down that aisle. Think of it as a carrot, a very big carrot, and it's dangling at the end of a very, very, very long stick. That money is not real until it is in the bank. And believe me, getting it there is going to be a gauntlet.
And this? Wow, this really shows you just how brutal that gauntlet is. This isn't some simple one-and-done kind of deal. Think of it more like a multi-year obstacle course. And believe me, there are traps hidden everywhere. Before they even get a whiff of government money, they have to go out on their own and raise $500 million from private investors. They've got to lock in contracts, real legally binding contracts for both the stuff they dig up and the magnets they sell. And they have to hit all these incredibly tough technical and construction goals that stretch all the way out to 2028. Oh, and if they mess up, you see that little clawback thing at the bottom? Yeah, that means any money the government did give them could get yanked right back. They might have to pay back every single penny. But honestly, the real kicker, the absolute trap here is number 5. To get the whole thing, to unlock the full potential of this deal, USA Rare Earth has to somehow find, get this, an additional $4.1 billion for capital expenditures. The government's money, that's not the prize. It's just the down payment on a skyscraper they have to build themselves.
And what is the price for all this government help? Dilution. We're talking massive, massive dilution. To even get this deal, the company has to just hand over a pretty big chunk of itself to Uncle Sam, somewhere between 8 and 16% of the entire company. And where does that equity come from? It comes directly out of the pockets of people who already own the stock. The insiders who own almost half the company, their stake shrinks. And all the retail and institutional investors, your slice of the pie gets smaller. So the real question you have to ask yourself is this: are you willing to let Uncle Sam take a big piece of your pie, as you can see right here on this chart, in exchange for funding that isn't even guaranteed?
Okay, those are fair points. I'll grant you that. The hurdles are high, but that's the price of admission for building something of this scale. You know, Wall Street sees the long-term potential here, and they're overwhelmingly betting that this company can clear those hurdles. They're looking past the noise and seeing the strength of the foundation.
Wall Street analysts are paid to sell stories, and the story's powerful, I'll give you that. But you know what? A good narrative doesn't pay the bills. So let's really stress test this so-called foundation. Let's compare the story that Wall Street is telling you with the actual numbers the company is printing. It's time to check for cracks.
Look at this. Just look. Roth, Cantor, Canaccord, all of them have recently upgraded their price targets into the mid-30s. The consensus is a moderate buy with a price target over $34 a share. You realize that implies more than 100% upside from where the stock is trading right now? These firms have entire teams of analysts whose only job is to dig through the financials, and they see a clear path to creating value here. They understand the risks, and they've baked them into their models. The market's verdict is pretty clear. The potential reward here completely smothers the perceived risk. You just don't get this kind of uniform institutional validation unless the underlying structure is sound.
Validation? Are you kidding me? Let's talk about actual performance. A story is not a balance sheet. The analysts can set any price target they want, but here is the cold, hard reality of the company's foundation. Yeah, they had a tiny little beat on earnings per share in Q2 of 2025. Whoopee. But look what happened in the very next quarter. An absolutely massive miss. They were expected to lose 6 cents a share. They ended up losing 25 cents. That's a 300% miss. What that does is it exposes a fatal disconnect between the story Wall Street is selling and the reality on the ground. This isn't a solid foundation. This thing is showing signs of serious stress before the heavy lifting is even started.
And look, you don't have to take my word for it. This right here, this is the gut punch. This is the single biggest red flag a bear could ever ask for. And it's the most terrifying phrase you, as an investor, can ever read. This isn't some analyst's opinion. It's not a short seller trying to tank the stock. This is a direct quote from a legal disclosure in USA Rare Earth's own SEC filing. Substantial doubt regarding the company's ability to continue as a going concern. Let that sink in for a minute. Going concern. That language comes directly from the company's own auditors. It's a mandatory warning flag they are legally required to raise. It means they've looked at the cash burn, they've looked at the debt, they've looked at the revenue, which, by the way, is zero, and they have concluded that they cannot say with any confidence that this company will still exist 12 months from now. You tell me,
What good are all those fancy price targets and buy ratings from Wall Street when you're staring at something like this? This isn't just a crack in the foundation, this is a 5-alarm fire. But the cracks in this foundation, they aren't just financial. A company that's this tied to the government is also subject to forces that are way outside of its control. See, when you invite Washington, D.C. into your boardroom, you also invite its politics, its scandals, and all of its scrutiny. And right now, a political hurricane is forming, and USA Rare Earth is caught directly in its path. These outside forces are about to shake this entire structure to pieces. And listen, this isn't some opinion from the fringe. This is the ranking member of the House Science, Space, and Technology Committee. That's the very committee that oversees legislation like the CHIPS Act. So when she speaks, people listen. Back in March of 2026, Representative Zoe Lofgren sent an official letter directly to the Commerce Secretary, absolutely condemning the proposed deal with USAR. She called the terms lopsided and a total distortion of the free market. When you have senior members of Congress officially on the attack, that non-binding letter of intent, it starts to look a whole lot less binding.
And here's the real substance behind her outrage. Some great investigative reporting, mostly from the Oklahoma Post, has basically unearthed a hornet's nest of political problems here. First, there's a blatant conflict of interest. One of the conditions for the deal is that USAR has to raise private capital, and the firm that's leading that capital raise is Cantor Fitzgerald, which happens to be a firm controlled by the sons of the Commerce Secretary Howard Lutnick, the same guy who's negotiating the deal. Second, the terms are seen as just outrageously favorable to the government, which would allegedly get to keep its full equity stake even if it pulls all its funding. And third, all of this is happening while Secretary Lutnick himself is tangled up in a massive personal scandal, facing calls to resign over his constantly shifting stories about his past relationship and business dealings with Jeffrey Epstein. So you've got a conflict of interest, you've got lopsided terms, and you've got a cabinet secretary drowning in scandal. USAR hasn't just hitched its wagon to the government, it's hitched it to a political lightning rod in the middle of a thunderstorm. The collateral damage here could be fatal.
And hey, if you want to know how this company operates when the pressure is on, just look at their track record on the ground. Look at the slide. On the left, you see all the promises they made back in 2022 when they showed up in Stillwater, Oklahoma with their hands out. They promised over 100 jobs, a big payroll, and production starting in 2023, all in exchange for over $8 million in local incentives. Now look at the reality on the right. That promised 2023 production date? Delayed. The promise of transparency? When the local press started asking if they'd even met their hiring quotas to avoid defaulting on the deal, you know what they got? Crickets. Total silence. This isn't the behavior of a reliable partner. This is the behavior of a company that is scrambling just to keep the story alive.
Okay, you've laid out the bear case pretty clearly. Political headwinds, serious financial pressure, and a ton of execution risk. It's a heavy load for sure.
It's a crushing load. The bull case is a story. It's a great story, but it's a story. The bear case is a collection of facts, SEC filings, and direct quotes.
So let's weigh it all. Let's put the bull case and the bear case head to head, right here, right now, and let you, the viewer, decide if this investment is forged iron or if it's just unrefined ore. All right, let's put it all on the scales. The bull case, it rests on this powerful, undeniable macro trend. The U.S. needs a domestic rare earths champion, period. That makes USAR a strategic national asset. They have a massive, even if it is non-binding, $1.6 billion letter of intent from the government as a backstop. You've got insiders with serious skin in the game, owning nearly 47% of the company. They are hitting key operational milestones like commissioning the Stillwater plant. And of course, Wall Street analysts are, for the most part, pounding the table with buy ratings. That's the iron. And the ore, the raw, unrefined, and very real risk, is just as compelling, if not more so. This is a pre-revenue company. That means zero profits, and it's just burning through cash. Its own auditors have slapped it with a going concern warning. That's a potential death sentence in the corporate world. The government deal is just a tiny fraction of the $4.1 billion in additional capital they still have to find somewhere. The political risk surrounding the Commerce Secretary and the shady terms of the deal is completely off the charts and could kill the whole thing tomorrow. And even if, by some miracle, it all works out perfectly, existing shareholders are going to face significant dilution. So, in short, the bulls are buying a fantastic story, the bears are just looking at the math.
So there you have it. The structure has been analyzed, the foundation has been stress tested, and the political cracks have been exposed. On one hand, you have the potential for a government-backed monopoly on a strategically critical industry, the kind of investment that could become a cornerstone of a portfolio for decades to come.
And on the other hand, You have a pre-revenue company with a going concern warning hanging over its head, completely dependent on a politically toxic deal that requires billions more in funding they absolutely do not have. It has all the ingredients for a truly catastrophic meltdown. The choice, as always, is yours. This is Iron Financial. We'll see you next time.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.